Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is October 1st, 2019. The countdown, the last month, the countdown has begun to Brexit. It's only 30 days. Let's get started. Let's open up the charts right here. Take a look at this. Americans reject universal basic income while Canada and the United Kingdom embrace it. Now, I want to tell you something about universal basic income. If you don't know what it is, it's basically they give everybody that's not working in the country a stipend or a small amount of money every month in order to keep them so that they survive. And there's only one way that this program is going to actually work on a serious basis, because what would happen is if they instate these programs, people lose their incentive to work if they give them too much money. You imagine if you got a universal basic income program in place and the people who are working at their jobs are making less money than the people that are on the universal basic income, a lot of people will quit, especially your low-paying jobs that are like your minimum wage jobs. There's only one way they can actually successfully make this program actually function properly. And it's actually a good thing if it functions properly, as far as I'm concerned, because it stimulates the economy. And the second thing why it's a good thing is it makes sure that you don't have quite so many people who are completely down out and broke, within a society, and these people have money to spend. These people are the ones who more readily actually spend their money. The rich, they stick their money in the bank and they don't spend it. People in the lower class incomes group, which make up the lower part of the middle class, they spend their money. And so that's what you need to get an economy going, is people spending their money. There's only one way that this can actually work, though. What they have to do is they have to give it to the people who are working too. In other words, if you're working a minimum wage job, or maybe 2 minimum wage jobs, then you should get the basic income on top of what you're already making. That's the way that this will work properly. And that way you don't have any incentive to leave your job to try to get the basic income. And the basic income should never be as much. The second part about this is it should never be as much as a minimum wage job. In other words, it should, at the maximum, probably be about 2/3 or half or 2/3 of what you'd make at a minimum wage job. This way, the people who have minimum wage jobs won't say, well, gee, I'm going to quit my minimum wage job to get the benefit, because the benefit's nearly as much as my minimum wage job. Give it to them anyway, so they're already getting it. And this would be like a increase in salary for all the people out there. Everyone would get it. Even people who are rich would get it. Give it to every single citizen, regardless of give it to doctors, give it to everyone, give it to people who are making, lawyers, people who are making big bucks. To them, it wouldn't be nothing. It would just be like a little pay bonus, a little small pay bonus. But to the people in the lower part of the structure of the society, it would be big deal to them, especially the people who for one or more reasons can't get on their feet. This would be a little bit of an added help. This would improve the middle class. So I think it's a good idea, but I think that it should be a blanket coverage across everything. In other words, instead of just being tight with the money, they're going to have to do this anyway. The time's coming very soon when they're going to have to implement these programs. And the only way it's going to be successful is if they're not penny pinching on it. You know what I mean? If they just open it up and just give it to everyone, and make it about, they're going to have to keep it about 2/3 of the regular. Let's move on. Let's take a look at the gold price today. $1,464. It's down $7.40 on the day. There was a support level I was looking at. I might not have mentioned it, but 1475. If it broke down below that, that's not good. And we're at 1464, so we're down below that support level. And let's take a look at silver today. 1704 for silver. It's up 9 cents, it says on the day, but silver's really not doing any good either, today. It's starting to dip down in price today. It's just about ready to go back into the $16 range. That's quite a large drop from where we were. We were at 1925 just a matter of days ago. And 1704 is quite a significant drop in the price of gold and silver. Let's take a look at cryptocurrency today. 222 billion with 67.6%. Let me just refresh the page. Yeah, it was the same. Cryptocurrencies went up a little bit over the past. For cryptocurrencies, a 3% move is a very small move. 83.85 to the upside. That's the price of Bitcoin today. 83.85, and it's holding its own above the $8,000 level. Now, about a week or two ago, back when it was around $10,000, I said that it'll find a lot of support at 8,000. Well, it did move down to 8,000. I called it right on the money, and now it's 83.85. We'll have to wait and see if it's able to actually hold that line of support, because the market is still a little bit on the bearish side. I'm expecting it to go bullish not too long in the future. Let's take a look now at the Dow Jones Industrial Average, and we're looking at it's up 109 points on the day. We refresh the page. 110 points up on the day. 27,027 today, and so there we go. The Dow's being supported and being buoyed. They're watching every darn thing that the Fed does. They shouldn't be watching the Fed so strictly, because the Fed's a bunch of tricky guys, tricky. 5 days here on oil. This is a 5-day chart, and we're looking at 54.54. It's up 47 cents on the day. There's an awful lot of pressure here on this oil market because the price is down, really down a lot. There's an awful lot of pressure here. There's an awful lot standing on what oil does. This is an oil-based economy, and an awful lot's dependent on what the price of oil does. And this price is getting really low. We can look for, we've had a series of events over in the Persian Gulf region, and it seems like we don't go very long before a big event happens over there. Something happens, whether it's just been one series of events after another. I'm almost expecting another one of these oil events that impacts the price of oil to happen. If the oil price goes too low. When you see the oil price going too low, and right now it's down low, you can almost think to yourself, gee, maybe an event's going to happen, U.S. Treasuries. Let's see what they're doing today. We're taking a look here at the U.S. Treasuries, and we're looking at the yields rising fairly significantly on the long end of the yield curve. Now, when yields rise, a lot of people think when price rise, it's rising, that it's going up. Bonds work opposite. When these yields are rising, it means that bonds are falling. It means that the market's starting to crash. And if this were to jump into double digits, and start to really move fast to the upside, it means that the bonds would be crashing. So these are quite significant moves. I'm keeping my eye on this carefully, because over 5 basis points is a fairly significant move in a rising yield. especially on the long end of the yield curve here. We see the short end either unchanged or falling very slightly. Let's take a look at the U.S. dollar index today. 99.60, so the dollar's riding high and riding strong. You know, I'm going to tell you, they're having an awful time of it with the repo market. They've injected tremendous amounts of money into the repo market. And, you know, what it's all about really is repo rates went up to like almost 10% suddenly. The last time repo rates went up like this was during the 2008, the Great Recession of 2008. That was the last time it happened. And it's starting to happen again, you know. And so they tried to bring those rates back down by dumping tremendous amounts of money in on it. And they're still dumping money. They'll be dumping money supposedly by their reckoning. They'll be dumping money until the 10th of October. So they got 9 more days to dump money in on it. And then they say they're going to end it. Well, you know, the rates is trying to creep back up again. Even while they're dumping money on it, the rates are trying to creep back up again. This is a signal that there's something wrong, something big time. Houston, we have a problem. That's what this signal is. A huge problem within the economy. And just addressing it by dumping money into the repo market, the problems are going to spring up elsewhere. Because these systemic problems that are in the financial system, first off, I don't think they can stop dumping money in this thing come the 10th of October. I think the rates will soar if they try to stop. The repo rate, the overnight repo rate will soar. So I think they're going to have to keep at it. And they're going to have to do more. They're going to have to enter into some form of stimulus like quantitative easing again. And this is going to be an announced program, you know. Listen, okay, thank you guys for listening to this report. And we'll catch you again very, very soon. Remember to give me a thumbs up. Bye-bye, guys.